Okay, welcome back. We got what 155 points on the Nifty right now. 15,075 is where we stand at. Edelweiss has come out with a report titled Techolution, I guess a play on revolution, the cloud fission. To discuss this more, we're joined by Sandip Agarwal of Edelweiss Securities. Sandip has been, of course, bullish on the IT space for a while now. It's a pleasure, Sandip. Great to have you here. So, I mean, there has been some underperformance from the beginning of the year from the technology space. What are you exactly saying? What's the core thesis of this report?
So, Prasad, if you recall, on 6th of September, we have said, 6th of December, we have said that, there will be quick 10 to 15% move in the IT stock before the results. And then the stocks will cool off. And exactly that is the way it played out last quarter. So, I think this is a story of every bull cycle that every quarter to quarter before the quarter, the stocks will move 10 to 15%. And then, they will cool off maybe 5 to 6%. So this is not going to change. But the thing is that the underlying thesis of the upcycle is very, very strong. In this report, we have tried to answer 5 simple things. One, that the cycle is a very long run 5-year cycle because, whatever hyperscaler sales of $200 billion is happening and it is going at 30-40%. Even if you take a conservative number of 15-20% growth for next 5 years, it translates into $1 trillion of services spend, of which India's global outsourcing is 25% or 250 billion, and India's market share is 72%. So we get 175 billion additional spend over the next 5 years. So which means doubling of Indian IT exports, which is what precisely, if you see what CVK of HCL was saying and other CEOs have been saying. So we have given the exact calculation why the Indian IT industry revenues will double in next 5 years, which implies 16-17% growth. Second, we have also tried to answer that margins will still improve from here simply because, tier 3, tier 4 talents as town talent is still available. And subcontracting costs are still structurally going down. So I'm not too much bothered about the currency impact. I would still say that, we will have a very, very strong earnings growth for next 3 to 5 years. It is not a 1 or 2 quarter cycle. It is a very strong upcycle and long upcycle.
Sandip, I want to particularly focus on cloud. We all know cloud companies like AWS, Microsoft Azure, Google Cloud are doing exceedingly well. The growth prospects for these companies are in excess of, 40% by a couple of, experts. I just want to understand, and for the benefit of our viewers, if you could explain the correlation with the Indian IT companies. How do Indian IT companies benefit when these cloud companies grow? What is the kind of work that we do for them? Just if you could detail a little bit more on that.
Yeah, absolutely. So very fair question, and I think this needs to be answered. So basically, if you see what happens, Rima, is that whatever hyperscaler sales is basically, if I have to give you a simple example, they are basically selling the air conditioner. Let's take an example of air conditioner, but the installation has to be done, which is equally expensive, right? And it takes time. Same thing is in the hyperscaler side. What hyperscalers are doing is they are just selling the cloud subscription, but there has to be people who will do the whole cycle of transitioning to the cloud and starting the day-to-day operation. So it will start with data migration, data security, running the software, upgrading the software for cloud version, running analytics tool on them, getting information out of them, then running parallel run with the existing infrastructure for some time. And when they get flawless result, then only you go live mainstream on the cloud. So this is a 4-5 year period, which it will take. Some enterprises will be able to do it in 12 to 14 months. Some will do. So it will run parallelly. It will run simultaneously with the existing work which is going on. So I think, there is a complete life cycle of cloud which comes into play, and there are 6 components to it, out of which 3 or 4 components, particularly the analytics part, the security part, the migration part. These are the part where all Indian IT companies actively participate. And you have to remember that in the world, there are only 10, 12 players who can do this work at scale, out of which TCS, Infosys, HCL are there, Accenture is there, IBM is there. So definitely, it is a very few players market with very big market size. And that is the reason I'm so optimistic on this cycle of cloud and the hyperscaler spends.
And do all the Indian IT companies have the capabilities to service this kind of, cloud migration, analytics, security?
So I would not say that, everyone has the capability to do large deals or transition, but particular specific talent is global. So if you recall what Mohandas Pai said a few months back on your television only, that your channel only, that, 80% of the software is coded in India, 90% is coded by Indians. So talent is global and is available. The only challenge is that not all companies will have the scale to do it. So, that's the reason. And if you see historically, that data also supports that. So if Indian IT industry has grown at X, TCS, HCL, Infosys, they have grown at X plus 3% or 4% consistently. And that is the reason I'm saying that if industry is going to grow at 16, 17, in TCS, Infosys can outgrow that. and with better margins, because the operating leverage will also play out. So I will not say all the companies have the capability, but the larger ones definitely have. The good mid caps like Mindtree, LTI, Coforge, Birlasoft definitely have those capabilities.
All right, Sandip, it's a pleasure. Thank you very much. Great speaking with you. I mean, Sandip has been sort of thumping the table bull on IT stocks for a while. He's been early, he's been right, and he continues to say that the opportunity is large for the next couple of years. We'll take a very quick break here. We'll come back more on markets on the other side.